Financial markets performance on any given day is documented by hard data. Stock indexes rise or fall by objectively determined percentages. But even so, your takeaway from the day's action can actually depend on which newspaper you read. For example, you would have formed very different impressions of what happened on Thursday, April 18th, 2024, depending on which of these two headlines you saw. S&P extends slide as bond yields rise. That was from the Wall Street Journal. Or Wall Street snaps four-day losing streak from the Financial Times. So was April 18th a good day or a bad day? Perhaps neither, judging by yet another take. Wall Street is mixed as bonds tick higher on strong data from the New York Times. Financial reporters' daily recaps go beyond the overall market direction by highlighting noteworthy price moves within the averages. Here's what the Associated Press, which is the source of the New York Times article, highlighted in order to provide further insight into the market action. Equifax down 9.1%. Las Vegas Sands down 8.7%. That was despite better reported results than the analysts had expected. Elevance Health up 4.3%. Genuine Parts up 12.2%. Alaska Air up 4.3%. Ally Financial up 7.1%. And Ibotta up 18%. The Wall Street Journal staff evidently didn't believe those 12.2% and 18% gains provided important insight into the day's activity. The Journal mentioned four significant movers, only one of which, Alaska Air, was among those named by the AP and the Times. As for the Financial Times, it focused on the disparate performance of the so-called benchmark S&P 500, quote, tech-heavy NASDAQ composite, S&P Financials Index, and small-cap-oriented Russell 2000. Its customary table of the day's best and worst performers included Snap-on, which the Journal also highlighted. One might at least expect unanimity in the reporting of changes in the yields on Treasury bonds. Yet here are the reported moves in the benchmark 10-year issue. Associated Press, New York Times, 4.59% to 4.63%. Wall Street Journal, 4.584% to 4.646%. Financial Times up by 0.05 percentage points, that is from 4.59% to 4.64%. Now, notice that after rounding to two decimal places, the closing yields were reported as 4.63%, 4.65%, and 4.64% respectively. Now, if it were possible to arbitrage the competing newspapers' non-equivalent quotes. Well, that opportunity doesn't exist, unfortunately, but for what it's worth, ICE indices' two decimal place numbers agreed with the Financial Times reported rise from 4.59% to 4.64%. Now, none of the foregoing is meant to imply that these respective publications were engaging in spin, which is a charge that you frequently hear leveled against the media. There are more innocent explanations available. Consider, for example, the Financial Times' account of Wall Street snapping a losing streak, in contrast to the Wall Street Journal's report of a continuation of the previous slide. Close reading of the FT's market wrap-up reveals that the S&P 500 was up by 0.4%, quote, by early afternoon in New York, end quote. Consequently, according to the salmon-colored Business Daily, quote, U.S. stocks were on track to finish higher shortly before the end of the daily session. Inspection of Bloomberg data reveals that as late as 3:50 p.m., the S&P 500 was above its previous day's close, only to dip below it by the time trading concluded 10 minutes later. Incidentally, the question of which way, quote, the market went on April 19, 2024, the following day, was complicated by a divergence between two well-known indexes. The S&P 500 dropped by 0.9%, while the Dow Jones Industrial Average, which in bygone days was considered synonymous with the US stock market, it rose by 0.6%. The Saturday editions of all three newspapers that I've mentioned dwelt mainly on the cumulative decline of the past week or more. Only the Wall Street Journal mentioned the Dow's gain in its stock summary for April 19th. The Financial Times, reporting as of early afternoon, put the S&P 500's gains at 0.8% rather than 0.9%. Now, none of these news organizations sought to slant the facts. Your understanding of April 18th's market action, however, depended to some extent on which source you consulted. That outcome underscores the importance of being a skillful consumer of financial news. So, with that, let me urge you to read closely, but also study and learn more about how the news is reported, what the underlying indexes and different kind of data they report really talk about, and that can help you to become a more effective and successful investor.